Today I'm going to be talking about Polestar, Swedish-based electric vehicle manufacturer. They're pretty cool cars. I think they have some excellent safety features. Performance is fantastic. Interiors are slick, but let's look at the company. I've got the Analyze tab up, and Thinkorswim gives us some data. It's not very good. When I look through here, what really caught my eye is that the price to book value is at 27.67. That is incredibly high. When I go over to the chart and I look at the charts, I say, how could that be the book value when the share price is at $3.30? Now, the price to book value, this is essentially the value of the company liquidated versus the value of its shares. And so to have $3.3 and to say that you're 27, the ratio between a share and the value is 27x. That's ridiculous. What's 330 divided by 27? Like that's what the share price would have to be at if the shares were to equal the value of the company, which is ridiculous. So I go to their website and I'm looking at their fourth quarter and full year 2022 financial results, and there are some really good highlights here. Really good highlights. Their total revenue increased 84% year on year. They're delivering about twice as many cars as they did in the year prior, and they have some cash on hand, something like $974 million. But I don't think that is all that great. It's kind of like a silver lining when you compare it to the amount of debt they're holding, which is incredible. They're paying, let's see here, liabilities to credit institutions, $1.3 billion. Trade payables, external and trade payables and accrued expenses related parties, $1.8 billion. Overall, the total equity and liabilities is negative $3.9 billion. There's just a lot of negative things here in terms of cash flow. So even though they do have a lot of money on hand, I think they borrowed quite a bit, and they're working really hard to pay that down, but they aren't netting a profit on their sales. So when I go back and I look at the chart, this makes a lot of sense. It really does. Whether or not the share price bottoms here, I don't know, but at a book value of 27 and that much debt and non-positive cash flows, I'm not going to be a buyer here. I don't think so. The momentum on the MACD is very bearish for a very, very long time. Implied volatility is kind of flat, hanging out at 107, not that big of a deal. Volume has been peaking through this sell-off. RSI is in oversold, but this doesn't necessarily mean we're going to get a bounce. In fact, it looks like this downtrend might be just gaining strength. I'm going to turn on the candles here, get an idea of what that looks like. Sometimes line charts are nice, but sometimes you've really got to turn on the candles to get the full effect. I mean, that is a steep sell-off. So for me, Polestar Automotive, great cars, cool products, but honestly, there's too much debt, and the share price appears to be overvalued, and that has to do with their negative total assets and liabilities. So that's what I've got for Polestar.